Well, thanks again for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. Just a reminder that yesterday, USDA came out with their national crop condition numbers. And, well, Janet was talking about the overall national numbers just a little bit ago. We also had some numbers for the I-80 corridor on corn and also on the soybeans. And they did show a decline in quite a few of the key producing states. In fact, in the state of Illinois, we really had some issues this past week as far as condition ratings go. Corn rating in Illinois went down by 6 points. My goodness, that was a pretty steep drop. And I think Ohio went down by 8 points. And Illinois on the soybean rating went down 10 points last week. And yet the markets don't seem to be responding. I want to talk with our guest analyst about that. We have Todd Bubba Horwitz on the line. He's with BubbaTrading.com, and he's based out of Chicago. Todd, thanks for joining us here today. What is the deal here that the markets do not seem to react to what on the surface would appear to be maybe a bullish fundamental?
Well, don't forget, Marlon, they'd rallied pretty hard, coming in. And for the last couple of weeks, we've been in this real churn of nothing. And, it's typical this time of year, lack of volume. We've got the 4th of July coming up next week, or 10 days from now. You're just in this malaise of a trading environment, and there's not a lot of participants that are actually pushing these markets back and forth. You throw in the other issues that go along with it, and you get these markets that they run up, then they break down. Then they run up, and then they break down. But in the meantime, if you look at them, they're all kind of holding, kind of in pretty strong levels that suggest that they're going to go much higher. But in the meantime, right now, we're just kind of in a relaxing kind of period looking for something. And unfortunately, sometimes in markets, there's nothing. You just have to sit by and watch them trade.
So July corn is higher all by itself. It's 4 cents higher at 7.64 3/4. The options for July options expire on Friday. Is there really even much volume in July? Has everybody rolled out into September or December now?
Most have rolled out already. That's usually the case. Where most are pretty much prepared, except for some of the active traders that are probably still playing. Because obviously, always in the delivery or always in the expiration, you could have some real wild, crazy action. So, those who understand it and have the correct positions on or positions that are somewhat protected but can benefit big may still be playing. But for the masses, for example, all my people have already rolled forward into August. So we're in August already.
All right. So December corn down 5.5 cents right now. On these quotes provided by Bar Chart, you have July soybeans down 15.5. The August is down 24 at 15.74.5, and November currently down 25 cents. On the wheat trade in Chicago, it had some pretty strong gains going for a while, and we're fading here. July wheat is up 9 cents now, and we have September wheat in Chicago now 8.5 higher at 9.95 3/4. Meanwhile, in the hard red wheat, this would be Kansas City. July is 6.5 higher. September 5.5 higher now at 10.53 3/4. In the spring wheat market in Minneapolis, you have July just 1.5 higher, but you have September going down 1.5. It's at 11.16.5 right now. We'll come back in a moment, and we'll talk more with Todd Bubba Horwitz about the livestock trade and some of these outside markets that are just going crazy this week, and we'll talk about that next. One thing that Todd Bubba Horwitz and I were talking about here during the breaks is what's going on with the crude oil market today. When we came on the air on the Market Day report this morning, the nearby August crude oil was down about $7.50. Well, right now we're down $5.27 per barrel at 104.25, and you have September down $5.20, at least as it stands right now. On the Dow Jones Industrial Average, we were down about 400 points, and now we're up 66 at 30,591. Well, that's interesting. A bit of a reversal taking place over there. On the U.S. dollar index, you have September futures down 471 points now at 103.740. So as the Dow rallies, the dollar has backed off a bit. Todd, what is that telling you about the overall atmosphere?
Well, again, Mark, you're in very thin markets right now. The volumes are so pathetic that you can, move these markets any bit of action. I mean, I don't see these markets going higher, but they are, and they've obviously had a pretty dramatic turn. I mean, the NASDAQ was down 300 early this morning and is now up over 100. But I think this is more just artificial, trying to push around and try to squeeze some of the weak hands out of the markets right now as they get ready to, I think, take them for another stroll to the downside. Because I think we're certainly headed much farther south. I mean, we're down, over 20% in all the indexes across the board, and they're all in bear markets. So these are typical bear market rallies that are misleading to the average person, but actually should be sold into.
Well, that's got to make people nervous about the demand here for the beef and the pork moving forward, doesn't it? At least at the retail counter here.
Well, I mean, obviously we've got a big problem, getting them to the market. But yes, and prices are relatively high, into what people can afford. And I think that, crude and cattle kind of should trade almost in opposite direction. Now we're seeing both lower today. But again, that's going to be a budget issue, and what can we afford to eat, which I think leaves hogs kind of stuck in probably 105 to 120 range. But cattle is at pretty reasonable prices right now, and I think we could go a little bit higher, but I think there's a greater chance to see them fall from here just based on the overall economy.
Right now on live cattle, you have that August contract quoted at 135.37. That is down 87 cents on the day. On the feeder cattle market, you have August down 70 cents at 174.60. On the lean hog market, well, so far you have the July down 52 cents, and you have the August contract quoted 55 cents lower. It's at 109.25. It looks like maybe we have seen just a handful of some, looks like maybe some steers and some heifers that have sold in Kansas this morning at 138. We'll see if that is a trend that continues or not. That's the latest off the wire. Well, that's the latest here on our markets. Thank you, Todd, for the time. Appreciate it. We'll talk to you soon. Todd Bubba Horowitz, BubbaTrading.com. Janet, back to you.